Hello, I'm Victoria Scholar, and today we're here to learn a bit more about the Ichimoku technique. And I'm pleased to say I have help from a true expert, the author of Cloud Charts Trading Success with the Ichimoku Technique, David Linton. And he's a well known technical analyst in the UK and a regular commentator on the financial markets. David, great to chat to you. Now,
Right.
it'll be really interesting to learn exactly how this works. There's a lot of different moving parts, but when you put it all together, it's actually quite a simple technique. Let's just start a
Yeah,
bit with the history.
yeah. So it's quite interesting. It's a Japanese analysis technique that was developed in the 1930s, in fact. So it's a very old technique, and of course, candlesticks are hundreds of years old. The Japanese have been using these for a very long time, but they've only really cloud charts or Ichimoku. I call them cloud charts because it's just a little bit easier in English, but these charts were only really popularized in the last 10 years. And there's a lot to, when you look at them, there's a lot to it. But once you've got the hang of it, it's a very, very quick way of understanding where you are and the trend. And this, I think when people see it for the first time, as we see this slide here, there's quite a lot to take in. And I can give you a little background about how these lines all get drawn.
Yeah. So talk us through these five cloud elements because, like you say, it's a little bit complex at first, but when you get to grips with it, it's actually quite simple.
Yeah. So the candles that we see are just the regular candles charts. This is actually on an old chart of the Nikkei 225 because it's a Japanese market. I've chosen a Japanese stock. We will look at some other markets and how they look now on the clouds. But basically, you've got the candlestick chart, and then the first thing you do is you draw a moving average, which is this turning line, and this is actually the midpoint of the last 9 bars. So it's actually a moving average that's not taking all 9 periods and smoothing them. It's actually taking the last 9 bars throughout the price history and saying what's the midpoint of the high and low of those 9 bars and plotting that. And that's it's a bit like a 9 bar moving average, but it's a little bit different because we're actually plotting the midpoint rather than the average of all 9 closes. And then the second line is the standard line, which is calculated the same way, but here we use 26 bars. And so you end up with 9 and 26. So this pink line is the faster moving average, if you like, and the standard line is the slower moving average. Now that's sort of the basic bit, but then the cloud gets developed from these moving averages. So the first cloud span is actually the midpoint of these two lines, and it's then plotted forward 26 bars. So that is unique to Ichimoku. It's unlike any other analysis technique where we're actually pushing forward by 26 bars. So if you like, on a daily chart, we're pushing forward 26 days ahead to then plot the cloud. So it's quite key to that bit of the calculation. And then the slower line is actually the 52 bar moving average. So we're basically looking at the midpoint of 52 bars ago and plotting that. So you get a slower line, which is the cloud span B, which doesn't change very much because it's looking back 52 bars for, and you need new high low information coming in on a day to actually change that. So the cloud is really like a shorter average and a longer average and shading in the bit between those averages and pushing it forward by 26 bars. The last line on the chart is the lagging line, and this is actually the price, the closing price shifted back 26 bars. And so the idea is really that the price above the cloud is bullish, and if the lagging line is above as well, that's confirming bullish. And then the price below the cloud is bearish. And that's really how we read the charts. So it just tells you where you are in the market. And that will become a little bit clearer when we look at some of the examples.
Okay, so you're saying if prices are above the cloud, that's bullish and that's confirmed by the lagging line. What
Yeah.
happens if prices are through the cloud and it's looking bullish, but that's not yet confirmed by the lagging line. How do we interpret that situation?
Yeah, so if we look at the next example, this is actually the Japanese market again. So what you have to think about, if we look back in 2018, this is a weekly chart of the Japanese market. Of course, the Japanese are mad about these charts, so it works very well in Japan. So here we're trending up with the price going higher and higher. The lagging line is also higher. That's the same thing as the price. The price starts to fall away. All the chart analysis that we would normally do with trend lines and Dow theory, the fact that we're making lower highs is starting to be a worry. But at this point, when we're now making lower lows than this previous low, at this point, the price is already through, but the lagging line isn't. But as we start to fall away, then the lagging line is through. So the lagging line is like a confirming signal. And if we look right now on Japan, this is today's chart for Japan. What's interesting is that the lagging line and the price are now hitting resistance of the cloud from below. So we've actually been in bearish mode on Japan, but now we're just starting to test this, and the price isn't through yet. But when the price goes through, then the lagging line will follow. And sometimes there's a slight difference, but because this is a relatively flat area, they'll probably go through it around the same time. But at the moment on this chart, the cloud is actually providing resistance on the long-term chart, the weekly chart for the Tokyo market.
Okay, that's really interesting to talk about the interaction between price and the cloud, as well as the lagging line and the cloud. Talk to us a bit about how the cloud can act as support and resistance. And also, I know some technical analysts look at the turning line and the standard line for support and resistance as well. So how does that all work?
Yeah, so the interesting thing is, because this is a relatively new technique and the Japanese have kept it relatively secret, there's been a lot of hypothesis about how you actually interpret these charts, and lots of different people use them in different ways. The key thing is to remember, if we're above the cloud, we're bullish. If we're below the cloud, we're bearish. If we came into the cloud from below, we would be bearish. If we came into the cloud from above, we are still bullish. So it's the really key thing is that's not in dispute is if you're above the cloud, you're bullish, and if you're below the cloud, you're bearish. But some people are looking for keener signals, and so they will use the averages in the normal way that you would use a moving average. So here, for example, we see this the turning line, and because we're above that, once we start to cut through that average, that's a sign that we're overextended. But I prefer to go to shorter time frames to do that, and we'll look at that in a minute, rather than using the averages. But some people swear by using the averages, yes.
Okay, so this technique is more of a way to look at broader bullish or bearish trends rather than necessarily buy signals or sell signals. And that's quite similar to Dow theory, which is essentially meant to be a barometer of general business trends rather than trades. Can you talk to us a bit about the connection between Ichimoku and Dow?
Sure. So really what's interesting is that the cloud, it's just a mechanism. And I always say to people, it's just a mechanism. But so we're bullish here. And then when we get the low after this high, and then the lower high, and then the lower low, by the time we're getting the lower low, we're coming through the cloud on the lagging line. So Ichimoku is effectively a way of trapping Dow theory. It's one of its true powers. And so it's just a visualization that actually now I'm in a bearish mode. I should be thinking of either going short or I shouldn't be thinking about going long. It's the classic, if the trend is your friend. So if you know what trend you're in, you'll do well. And it's easier to make money long in this market, and it's easier to make money short in this market. So what you want to do is always have the underlying trend very much in the heart of your trading strategy, so that you're making the trend your friend effectively.
Now, I've noticed that the cloud changes color from red to blue when the cloud span A crosses the cloud span B. How do we interpret that? What does it mean when it's red, and what does it mean when it's blue?
Yeah, it just is a reminder that if you think about it, that the slower average in this instance here, the faster average is increasing faster than the slower average. So that's like a form of acceleration. When we turn red, the faster average is sinking faster than the slower average. So that's just an inherent bearishness that's building in the cloud. So it isn't something that you would necessarily attach a lot of importance to, but it's just a flag that also things are looking more bearish. If I move on to maybe another chart, this is the Chinese market, and this was up 5.7% overnight. So this is a really good example where the cloud starts to become quite noisy, and here what you would do is the normal technical analysis of trends. So we've literally in the last 2 trading days in China, we've just broken out of this great big 2-3 year trend. And so this is weekly, sorry. So the last 2 weeks, and this is today's candle for the week. But what's interesting is the cloud hasn't been that clear, but now we're above the cloud. It's all clear blue skies for Chinese stocks now that we're in the bull zone, if you like. But we've been really quite bearish for some time, and so literally in the last couple of weeks, the picture has changed very, very dramatically, and we've broken out. So now, as a Chinese, if people are trading Chinese stocks, and most Asian markets are following, even Hong Kong was up quite strongly, despite the political turmoil we're seeing there. Of course, as a technical analyst, we don't really read too much into the news. The fact is, we are now turning into a bull mode, and you'd use all the normal technical analysis techniques. The fact that we closed higher than the high that we saw in 2019 is really significant. This high back in 2018 is resistance, so that's where we're looking to next. But the fact is we're in bullish territory. So on the weekly cloud, the long-term picture in China in the last 2 weeks has changed very dramatically for stocks based on this chart.
Now, I've seen on the cloud there tends to be areas where it flatlines. What does that mean? What do we do in that scenario?
Where it's flatlining, it means that you're not getting any new high-low information, and that typically is on cloud span B. And so here you've got 52. You're looking for the biggest high in the last 52 bars, and these dominant high lows are effectively not changing the calculation. So it just means when you see that flatlining that we are very much in a sideways market, or that we have got dominant high-low information that's dominating the construction of the cloud. So you don't read too much into it, but it's just telling you that there are dominant high lows that are not being changed with any new information coming onto the chart.
Now, one of the advantages of Ichimoku is that you can get time projections as well as price. Can you tell us how that works?
Yeah, so basically I've just moved to the next one, which is the NASDAQ. So here we see we're bullish above the cloud all the way. This is a fabulous example, for example. So we've touched the cloud here on the lagging line. We did go through on the price, but we didn't on the lagging line. So this was a warning, but we didn't actually get the confirming signal on the lagging line. We came back. So here's where we fell all the way this year in the crisis. We fell all the way to here. We closed the week out right on the cloud, and the lagging line was close to the cloud. So the cloud was providing support. So what you could do is, if someone said to me now, and the fact we're making new highs, of course, is bullish. If someone said to me now, well, what's your key level on the NASDAQ? I can just look forward on the cloud, and this is towards the end of the year. And I can say now that provided the NASDAQ stays, let's say 8,000, but I could say 8,300. If the NASDAQ stays above 8,300 at the end of this year, we are still in bullish mode. So you get to see where your resistance and support areas are into the future. So it's a really powerful aspect of Ichimoku as well.
And how do you interpret the sort of thickness or thinness of the cloud?
Yeah, so here it's a great question. And here we see the cloud is relatively thin because this is a really clearly trending market without a lot of volatility. And the cloud is relatively thin. It thickens up here because we're starting to see some volatility. Remembering this is projected forward by 26 weeks. So it's thickening up here. And what was interesting here was this happened so dramatically that we just had this period where both averages were the same. So the thickness of the cloud will normally happen when you get a really big capitulation, and in this instance, it's not very thick. If we look back at this instance, for example, we see here it's very, very thick, telling us that this move here, all the time we're setting new lows, but the cloud span B isn't changing because we haven't got new low information coming in. So you tend to get thicker clouds at bottoms, and because tops tend to be more rounded, they're less V-shaped normally. But it's just an indication that the market here has been really well behaved, and even here this has been quite short-lived. We've pulled back and it's had a little bit of an impact on the cloud, but because we've bounced back to bullish, we're back into bullish mode on the cloud view as well. So the Nasdaq is looking extremely bullish. We're making new highs. You can't deny it.
And how do you deal with temporary breaches of the cloud?
Yeah, so that's another great question. So here we have got a temporary breach. We had a couple of weeks where at the beginning of 2019 where we were through the cloud on the price, but not on the lagging line. And I like to use a 3-bar rule. So for me, I want to see 3 complete bars where we're below the cloud. And in this instance, we were back into the cloud just in the 3 bars time. So you were at 1, 2, 3, and we were back into the cloud. But more importantly, in this instance, the lagging line never came through. If we go to perhaps the next chart, this is the CAC 40 in Paris. So here we've jumped, and what you'll tend to do is when you've jumped through on the price and the lagging line is just coming through, you can see that the cloud is still falling away. So you have a good understanding that we need to just hold this level, and soon we're going to be above the cloud anyway. But it is quite challenging at times. You see here, for example, we did have just a temporary breach, and that's where the 3-bar rule would just save you from taking immediate action. So it is quite good to use a signal delay. And this is this leads us quite nicely into the idea of time horizon.
And Ichimoku works a bit like moving averages in the sense that it does a lot better in trending markets. What do you do in areas of congestion?
So that was really what we saw with the Chinese situation. So here we are very much in a congested market. We had a high, a low. We've got a symmetrical triangle pattern going on, and we are very, very congested. And at this point, because of the construction of the clouds, like moving averages, you're just going to get lots of noise. But once you break, so we've now got a great example where we've broken. Once you break, we're going to adhere to the cloud. And because of this move, the cloud is now going to start moving up and up and up underneath the price, acting a bit like a stop loss, as we saw on the Nasdaq. This just kept locking in the move so that you stayed in with this trend. And again, if you had ignored this temporary breach, you would have, even with the latest sell-off, you would have stayed in on the long term, because the Nasdaq was never bearish, even throughout this recent crisis. Nearly all other markets were, by the way, but not the Nasdaq.
And just very finally, I mean, there are some similarities between Ichimoku and just using moving averages. So what's the advantage of using this technique?
It's just more pictorial, I think, is the big one. So you effectively, above the cloud you're bullish, below the cloud you're bearish. And here we got an interesting situation. So on the CAC 40, we're not quite yet bullish on the weekly chart. So long term we're still cautious and bearish, but medium term we're now crossing, and most European markets are doing this. And so this just tells us that we're coming into bullishness, because we're on the medium term daily chart, which is thinking weeks and months ahead, we're now looking bullish, but the longer term trend will take longer to change. And if we look at the last example, gold, again, we had this temporary breach, but we've been bullish on the daily, bar this temporary breach, but on the weekly chart, we've just been bullish the whole time. So the long-term trend is bullish, but quite often you'll get shorter-term counter trends that just belie that longer-term trend for a little while. But this chart is, again, an extremely bullish chart.
All right, David, thank you so much for all of your help with understanding Ichimoku. And That was David Linton, the author of Cloud Charts, Trading Success with the Ichimoku Technique, and he's a technical analyst and a well-known financial commentator. I'm Victoria Scholar, and thank you for watching IGTV.